Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Oh my goodness, there is so much going on in the world today. It is easy to get overwhelmed and not figure out what you should do next. Today we're going to talk about how do you manage life when we're navigating uncharted waters, and what are some of the lessons we can learn from previous crises. That and more today on the Real Estate Guys radio program.
Do you have a self-directed IRA invested in a syndication? Guess what? It's a ticking time bomb. Why? Because IRAs get hit with UBIT taxes, even Roth IRAs. Hi, I'm Damian Lupo, and we fix this problem for you forever. It gets even better because using the EQRP, you can literally get rid of taxes from all of your gains forever and protect your nest egg. The EQRP is the best vehicle to get it done. IRAs can't do it, not even Roth IRAs. You see, UBIT happens whenever any type of IRA invests in anything with debt. Don't worry, even if your IRA is already invested in a deal, we can kill that tax. Our team at Total Control Financial is here to give you control of your retirement money and free you from that deadly IRA tax forever. Want to learn more about the EQRP? Send an email to eqrp@realestateguysradio.com. I'll email you my special report and send you a copy of the QRP book. Paying a 37% UBIT tax is stupid. First step to getting rid of that tax is to send an email to eqrp@realestateguysradio.com today.
Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms. With me, as usual, is co-host financial strategist Russell Gray.
Hey, Robert.
Everyone's life has changed drastically, dramatically, to different degrees, and wherever you are about this whole coronavirus thing, whether you think, oh my gosh, it's the pandemic into the world, or hey, it's not that big of a deal, somewhere on that continuum is the right answer. We don't know that. And frankly, you don't know that. And we're not here to tell you what's right or what's wrong. What we're here to talk about today, though, is the fact that as real estate guys that have been through a lot of different cycles and are long in the tooth, we've seen not everything, but we've seen a ton. And even though we don't know the answer, what we have gotten good at is asking the right questions and also considering multiple perspectives. So before you freak out about what's happening, today I think we'll talk through many of the things that we see happening, but also give you some timeless wisdom on how people we know get through this kind of stuff.
Yeah, I mean, one of our favorite saying is think and do is better than wait and see. And a lot of times the tendency when there's crisis is to be deer in the headlights, to hunker down. You know, the governments around the world are telling people, shelter in place, hunker down, don't work, enjoy your life, end of all commerce. So whether you believe the pandemic is real or not real, all of that's irrelevant because the world is behaving as if it's real. And the economic consequences, as we've been saying for weeks on this program, are going to get on you. They already are. So the big question is now, what should we be thinking about? What is it we can do? And some of those lessons are in the past. And as Robert alluded to, you know, we've been through 2008. Some of the younger folks here listening to the show haven't been. And so we're going to draw upon those lessons. We also have relationships with some really smart people, and they bring different perspectives. Sometimes you may have heard those perspectives, sometimes not. But we're going to share some of that. And then we're going to take a look at what's actually going on from a real estate investor's perspective and try to come up with some practical ideas about what you can do right now in the current set of conditions to try to capture opportunity and mitigate loss.
So human nature is to react, and you react like the deer in the headlights, which is the fright, or you jump out of the way, which is the flight, and there isn't necessarily a right or wrong answer. You see people that are absolutely sheltering in place before their governor tells them they have to, and then you see folks that are completely disregarding the message on social media. So again, everyone's reacting different. I think calmer heads always prevail, and in a case like this, as real estate investors, we have a huge advantage. Markets like the stock market, even the metals market, move instantly. That's not true in the real estate market. And if you look at what's happened in the stock market, what's happened to equity prices, what's happened in bonds, and what's happened in real estate, those are drastically different things in the short period of time that we've seen this.
Yeah, I ask people all the time, you know, how your stock portfolio doing? How's your investments doing? And if they're in paper, they're like, oh, I lost 10%, 20%, 30%. This stock market drop is already worse than the Great Depression stock market drop. It's the biggest in history. So people that were fully invested in the stock market just paid that price. The follow-up question is, well, you know, has your mortgage or your rent changed? Well, no, it hasn't. Okay, well, the person on the other end of that, the landlord or the mortgage holder, their income hasn't changed. Now, that doesn't mean it won't. You've got unemployment going through the roof. You've got a lot of things going on. The difference between now and 2008 is back in 2008, Lenders were not ready to negotiate. Nobody really realized it could get so bad and loans could go into default. And if they did go into default, the ripple effect it could have through the financial system and the threat it had to credit markets. Today, clearly, the Federal Reserve of the United States sees it. Their reaction tells you they are bringing out the big guns early and often. Lenders are already beginning to contact people about workouts. The government is coming out on daily press conferences talking about rent relief, eviction relief, mortgage relief, all of those kind of things, some of which are going to get on landlords, right? And then there's going to be gaps, and these gaps are very concerning. It's one thing to say, oh, you can't evict somebody, and another to say, oh, we're going to give you mortgage relief. But if the person stops paying you your rent, and it takes 3 months for you to get mortgage relief, you're going to have a cash flow problem. And so it is going to get on real estate. But Robert made a great point, and that is that there is an insulation. It moves slower. And so you have more time to react, not a lot of time, but you have more time to react. And hopefully, you folks out there are doing that and looking at your options.
So let's talk about some of the specific things that are happening in the market. We alluded to this at the end of the last show, the whole Fed cutting rates to zero. And oh my gosh, the big bazookas are coming out. And what we didn't have as any clarity at that point is what the market reaction would be. And the market reaction was kind of nothing.
It was worse than nothing. It was, we don't believe you. There was a vote of no confidence.
Yep.
The stock market gave a vote of no confidence to the Federal Reserve. And so that ought to make any stock investor extremely concerned. Now, here's the thing. I understand that there are tweets that go out regularly from certain people, and there are certain people that believe that the stock market is a proxy for the economy, but it isn't. The stock market doesn't really reflect what's going on in the economy. I mean, economic activity is people going to work, producing things, conducting business. Stock prices can go up or down. So stock prices are reacting to an anticipation of a slowdown of corporate profits. And I think smart people realize no amount of money printing is going to create commerce. People who are sheltering in place, people who are not going to work, who are not making things, who are not shopping, who are only buying the bare minimum, who are hunkering down and hoarding supplies and hoarding cash, that is going to slow the velocity of money tremendously. And the problem is it's like a body that's had a heart attack. You're watching an economic heart attack in place. It doesn't matter what the blood volume is. The concern isn't low blood pressure because there's not enough blood. There's plenty of blood. There's plenty of cash. That's not really the problem. The problem is it's not flowing. Now, with that said, they're pumping gobs of cash in, and that's a different problem that will probably manifest somewhere down the road. So you got to look at, kind of what's going on right now, and then you got to look at what's coming down the road, because the flip side of real estate being insulated and moving slowly is that it takes you a little bit longer as a real estate investor to make adjustments on what's coming, and everything's coming at you pretty fast. So I would make the argument that now's not the time to be a deer in the headlights investor. Now is the time to really be a think and do investor. But, obviously you don't want to jump from the frying pan into the fire. So you have to think and then do. Don't just do, but think first.
She made the point that the stock market both anticipates and reacts to what happens. And I don't watch a lot of news, but this week there's been some presidential addresses and our state of governor's address, and you watch the TV and then you watch the talking heads, and they often have the stock market right there in live real time. And for instance, watching what the president was saying and watching the stock market first react a little negatively and then go up and then up a lot and then up more, like literally the market is reacting. So real estate actually does that too. It just doesn't do it in real time. We make real estate decisions based on things that are happening. We've talked a lot in the last year, for example, about opportunity zones. Opportunity zones are a great avenue for appreciated investors. No matter what you invested in, stocks or companies or whatever, you've got this big tax burden. This is a great tool to alleviate some of that and perhaps defer up to all of the new gain on what you do in real estate opportunity zone. And so we make decisions based on as things change. So it's just like the stock market. It's just the stock market moves at lightning speed. So I think we have a really great opportunity as real estate investors to pause, consider, ask, seek first to understand, talk to folks, and then make decisions.
Yeah, absolutely. I mean, the stock market is falling because people are selling.
And they're selling largely because of fear.
Right. So, but they're also, in some cases, even though they're taking losses relative to the highs, they're still experiencing capital gains.
Yeah.
And so to your point, Robert, some of that money, some of those folks are going to have capital gains taxes they were staying in the market to avoid, and now they are wanting to avoid the stock losses, the equity losses staying in the market. Now they're willing to take the tax, but the opportunity zones give them an out. And so there's an opportunity out there, if you're a purveyor of opportunity zone opportunities, to realize that there's going to be some folks out there that are liquid. They have some cash. Sometimes we feel like, depending on where you're at on the food chain, I don't have enough resources to take advantage. I can see blood in the streets. I can see bargains. I can see quality assets going on sale. The problem is I don't have any money. Well, that's why we've been proponents for the last 8 years of syndication. And that grew out of the first time that the credit markets collapsed, the first time that money seized up. We thought the opportunity was going to be huge in private capital. Then we watched over the last several years where lending came back. And so, people are going, well, why would I want to, raise equity when I can go get debt? But we're hearing on the street already that lenders are beginning to back off on their lending. It's starting to be tight and broken credit markets again. And if that's the case, then it's going to be a resurrection of private equity. So you look at the money coming out of the stock market, the desire to find safer havens, the way real estate has behaved in the crisis relative to other things. And history says, and I think it's going to prove to be true again this time, is that when money goes looking for a safe haven after a nauseating ride in the Wall Street roller coasters, it often ends up in real estate, either on the equity side where people buy into the real estate, or on the debt side where they buy private mortgages to get the yields. Now, you've got to be smart about what you invest in terms of markets and product types, and make sure you have good management. But there's still going to be a lot of opportunity in real estate, and there's going to be a lot of money coming into real estate because of what's happening, even though for those of us that are already here, if we're flat-footed or not structured properly, we're going to get some lessons, like we did in 2008, right? We weren't structured like Kenny McElroy. McElroy weathered the storm quite well. People who were a little bit more leveraged, like I was, ended up paying a bigger price. So that's part of why we look at history at the same time we're going through current events.
So I've talked to several real estate investors this week, and I'm sure our listener camp is divided into two parts. One, what do I do with my current holdings? How should I be thinking? What should I be anticipating? And then two, where will there be future opportunity? We'll talk about both those things today on the Real Estate Guys radio program.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hi, this is Garrett Sutton, Robert Kiyosaki's asset protection attorney and the author of Loopholes of Real Estate and Start Your Own Corporation. As an American or foreign-based investor in U.S. real estate, you know we are a litigious society. You know that you need to protect your real estate, paper, and bullion holdings with the right mix of LLCs and corporations. Our firm, Corporate Direct, not only forms these entities, but importantly, we properly maintain them too. If you fail to follow the corporate formalities, you can lose it all in an instant. Corporate Direct is your source for LLC protection and maintenance in all 50 states. Visit corporatedirect.com or call 800-600-1760. Mention the Real Estate Guys for a free bonus. That's 800-600-1760 or corporatedirect.com. We look forward to assisting you at corporatedirect.com.
Hey, this is Gene from the Residential Assisted Living Academy. Making money, cash flow is important. Doing it for the right reasons with a heart is even more important. If you'd like to learn more about turning a single-family home into a cash flow machine, earning $5,000, $10,000, $15,000 net or more per month, well, I'd like to share that with you. Our motto is do good and do well. There is a silver tsunami of seniors coming, and you have a huge opportunity. Take advantage of it.
To gain access to an informational webinar presented by certified financial planner and real estate entrepreneur Gene Garino, and discover how you can turn a nice home in a nice neighborhood into a cash flow machine, send an email to ALF, A-L-F, at realestateguysradio.com. That's ALF at realestateguysradio.com.
Hi, this is Lawrence Yun, Chief Economist with National Association of Realtors, and you are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio show. Thanks for tuning into the show today, however you're doing that, and wherever, hopefully you're sequestered with someone you love. We're bringing you information and ideas like we do every week and have for now 23 years. When the world changes, well, we talk about changes, and this week we're trying to apply some of the lessons we've learned in previous crisis investing situations to what's happening today. And I'll tell you, the biggest crisis we went through personally was the mortgage meltdown in 2008. We had been through, Y2K and some other things, certainly the 87 stock market crash, not to the degree that we went through 2008, but we've seen those things happen, and maybe you've seen those things happen. So here we're trying to take whatever lessons we can and apply to current situation. And it's not just us. We have the awesome opportunity to be surrounded by people in different areas of investing, not just real estate, and we're picking their brains, so we'll share some of that today. What we're not here to do is to shovel out doomsday porn. There's a lot of folks who are jumping on the coronavirus bandwagon and, trying to get views and listens and likes, and that's great. We've been here for a long time. Before there was problems, when things were going great, when things weren't going so good, we plan to be here a long time in the future. So big term perspective, I think everybody listening is going to want to own more real estate 10 years from now than they own today. And they're probably going to want to own more real estate 20 years from now than they own 10 years from now. But in the meantime, what to do? We talked before the break about the sell-off in the stock market. Do we expect to see a sell-off in the real estate market? Well, what happens anytime there is tension in a market and there are challenges is you see folks that aren't adequately positioned have to sell. Look at the metals market. What's happened in the metals market is people sold their paper metal, not real metal, but paper derivatives, which drove the price down. And yet when people went out to buy physical metal, there wasn't any. So literally, there's huge demand for physical metal and the price is going down. That's crazy. Now, we talked about that last week, so we're not going to belabor that point. But here's how it works in real estate. Today, nobody's stressed. People are paying their rent. But you know what? Those 4 tenants who work at the restaurants that are in your building who no longer have jobs because they don't need waiters and waitresses right now, well, it's not long before that's going to affect their ability to pay your rent. So if you're well positioned and you underwrote the property correctly and you have a good lender partner, you're probably okay. But what happens if you didn't? Well, there are going to be people that are going to have to give up real estate. And so one of the tangible things to be thinking about right now is, how do I prepare for the sale? Russ, you talked about syndication. That's a great way to prepare for the sale. Raise money to go find bargains. Now, I don't see tons of bargains right now. We've just, 2 weeks ago, we were in a market where cap rates were still compressed. There was a lot of competition for good assets. That's going to change in the next 90 days, and there will be bargains if you're prepared.
Yeah, and not only that, but I think as those cap rates rise relative to interest rates on other income investments falling through all of the attempts to stimulate the economy, the net is going to be, there's going to be a window of opportunity before the capital has found its way back into real estate to bid up the price and bid down the cap rate. And that's where you want to be in acquisition mode. The key is how quickly can you get there? So you don't want to be deer in the headlights. You definitely want to be out there acting. And remember, even though it may seem like, a lot of blood in the streets, falling stock prices and rising cash stockpiles mean there's lots of cash going to be looking for a home. And really sophisticated people that we've talked to who are looking at what's going on in terms of the Fed's response. The dollar is the world's reserve currency. So what the Fed does, no matter where you are in the world listening to this show, has an effect. A lot of the things we're going to talk about is U.S.-centric. The most of our audience is our United States or, Americans and dealing with the U.S. real estate market. But at the end of the day, the dollar is getting a temporary pop as people flee into it to get out of other currencies that are already in trouble. But ultimately, I think based on how many dollars are being printed and how many things are trying to be papered over by the Fed, the dollar is going to run into some weakness. And we talked about this, I think, last week, but the stability of gold pricing is kind of an indicator that the smart investors out there are beginning to see that. So the people who understand that have cashed out and are sitting in cash are going to be looking for for real assets, good cap rates or good yields that they can find to put their money to work. So there's going to be a big opportunity.
Well, there sure is. And it's not just real estate, right? Real assets like metals, like oil. Our good friend Bob Burr from Panex, I reached out to Bob when oil went down to 20-something dollars a barrel. And, it's hard to make money in the oil business at those prices, and said, hey, buddy, just checking in on you. Now, Bob has been around a long time. He's got great perspective. He also is very prepared to weather a storm. And we had a nice little interchange. But he basically said, listen, I've been in the oil business since 1973. I've seen it bad. I've seen it worse than this. But you know what? I found that there are more opportunities during a downturn than when things are rolling high. So they're out, they're buyers, they're looking for distress. And what they do is in kind of a niche in oil and gas, but they're buyers right now. And most people aren't. And that's kind of the key. Now, I got a very interesting email this week from someone who basically said, hey, everybody's, crazy panic, so you should do the opposite. And this guy was advocating that in the midst of all this craziness, take a chill pill and come buy from me. It was disgusting, actually. It was a terrible email, but it's just how people react. And that's what you see in crisis. This is a guy that needs to sell something, so he's out there belittling people that are concerned and saying, never mind any of that, buy some stuff from me. Well, this is not for you either. Don't get caught up in greed and don't get caught up in fear. Try to look at both sides and make decisions.
Well, having good emotional control is the hallmark of a professional investor. You have to be able to see both sides and not get over enamored of the upside and not become over petrified of the downside. So that's part of it. The other thing is you need to act upon the things that you can control so that you're in a better position to react to the things that you can't control. And right now, there's a lot of things that you can't control that are happening, and they're happening at a fast level. That means you've got to double down on your diligence over the things you can control. If you've got a portfolio right now and it seems to be okay, I'd be on the phone with my property manager saying, hey, what's the word on the street? What's the thumb on the pulse? Are we getting more or less applications? Are tenants coming in having a hard time paying the rent? Are there things that proactively we can do to enhance retention? Because I'm guessing other people are going to be getting vacancies and they're going to be lowering the rent. So you got some of that going on.
Well, and the other thing, most of this has hit since the first of the month. And frankly, most property managers are going to have zero perspective on the 25th of the month about how it's looking. On the 5th of the month, they're going to know. So you got to stay close to these people. Absolutely reach out proactively to your property managers. Same thing with your lenders. Russ, you mentioned earlier that, lenders are a little more available. I'll tell you what, I think lenders today are a lot more proactively pliable. We have several folks in our syndication mentoring club that shared that with us this week that, hey, they've had some lenders say, hey, guys, we understand things are going to happen. We're here for you. That wasn't happening in 2008, but it is today.
Yeah, well, you make a great point just about community right there, because in our club, we've got a bunch of active syndicators that are out there, and they're all experiencing this from different perspectives, different markets, different niches, different product types, different investor psychologies. And they're out there asking questions of each other, asking questions in the marketplace, bringing back their answers, having interactions with lenders and property managers and bringing that feedback. And the point of tribal learning is that you learn everything faster. So wherever you are in the world, whatever niche you're in, whatever market you're in, one of the most important things you can do at a time like this is lean in to your tribe and enhance your participation in whatever forums or meetups, virtual or otherwise, that you have an opportunity to be a part of. And if you're not part of one, I know everybody wants to put 5 hands over their wallets right now, but there is a smart time to make some good investments. Fortunately, if you're the type of person that's out there and say you just got laid off, you might think, oh my God, I can't invest in anything. I just got laid off. Well, you're probably going to get unemployment. It's my understanding, at least in the United States, that there's some aggressive legislation coming to make sure that people who are being harmed in their jobs are going to have income. And you've been given back 100% of your time. So let's say you get back 60 or 70 or 80% of your income and you get back 100% of your time. Well, you can take a little bit of your savings and invest it in your education. and then use that to invest in your free time to go out and create new opportunities for yourself so you don't have to wait for someone out there to create a job for you. This is maybe a good time to think about becoming not just a real estate investor, but a real estate entrepreneur.
You know, Russ, that you bring up a good point. We have all kinds of people who are part-time investors that listen to our show. They listen during their commute. Maybe they don't have a commute now. They listen when they're at the gym. Real estate isn't their top thing. It's one of the things they invest in. Well, all of a sudden, when you're given a gift of time and real estate has been pretty protective of your wealth, it might be time to hone up on some stuff. Go listen to past episodes of our podcast. Go listen to a bunch of other great podcasts. Get a bunch of good ideas. And then the community you talked about. Start talking to people about this. You talk to your property manager. They've already talked to 4 or 5 other owners. Now you're starting to get some of that communal knowledge. And that's where you really find out what's happening. You know, we got 2 situations this week where you and I got on calls with investors and kind of helped shepherd them through a couple of situations. And in both cases, it was like, man, that was so helpful. I wouldn't have thought of that. Exactly. That's why you need a different perspective. And one of the things we train ourselves to do, and we talked about this last week, but the whole 3 sides of a coin is not to just jump to a conclusion. Stuff is happening. It's scary. These are very different times, uncharted waters. But you know, slow and steady wins the race. You're not going to make crazy fast decisions, but you can't be deer in the headlights either. Yet some action is going to lead in the right direction. So I think obvious action is to learn and to ask and to get into these communication loops and to start to build up a tribe if you don't already have one, because there is safety in numbers.
Yeah, absolutely. I mean, you know, we joke all the time about not being the smartest people in the room. You never want to be the smartest person in the room. You certainly don't want to be the smartest person in a crisis, right? If you're looking around and you're the smartest person, then you're in the wrong place, because you're not going to learn how to navigate the unknown, the uncharted. There's a lot of inputs you're going to need. There's a lot of data points, and a lot of it is not going to be printed and available online on the internet, because that's all reporting what already happened. The closer you get to, you know, the front lines, the more real time your information is, the better you're going to be able to make quick decisions, you know, because credit markets are going to seize up, job losses are going to occur quickly, tenants are going to quickly start having problems making payments, even if it's just a lag. You know, you may have reports of people getting laid off in your community. Maybe a big percentage of your tenants are in that category. It may be 2 or 3 weeks or 2 or 3 months before they start seeing unemployment benefits. You need to be aware of those things. In those cases, it might be worth your time to say, hey, we'll work with you, because you know that they are going to have some income coming. Other cases, there's no solution. This person's lost their job, they've lost their business, and you know that legislation is pending that's going to prevent you from evicting them. You better, unfortunately, you better get them out while you can. So there's no one-size-fits-all answer. The key is you need real-time data as quickly as you can get it. You need to make quick, informed decisions, and you need to take decisive action to the extent that you're able to in order to preserve your portfolio and put yourself in a position to take advantage of future opportunities as they present themselves in this market.
We're talking about how real estate investors can navigate these uncharted waters we're in. We've got more to discuss. Plus, we're going to play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Attend this syndication event this Friday and Saturday virtually. Get the details by sending an email to syndication@realestateguysradio.com.
Having trouble finding deals where the numbers make sense? Invest in an asset class that delivers cash flow to you in good times and bad, and where most of that cash flow is tax-free. I'm Dave Zook. Many of you have heard me speak at Real Estate Guys events or heard me on their podcast. My team is a top 5 ATM operator in the country, and right now accredited investors can make cash flow returns well into the double digits and get huge tax deductions. For your free report on this lucrative asset class, email atm@realestateguysradio.com.
Hello, I'm Brian Tracy, and I'm here today with Robert Helms. He's one of the real estate guys, and he always has wonderful ideas to share with you that can improve your life, improve your income, and help you to achieve more than you ever thought possible.
Welcome back to the Real Estate Guys radio program. Thanks so much for tuning into the show. Hey, if you ever want to do bigger deals using other people's money, we've got great news. The Secrets of Successful Syndication event is still happening. Virtually, though, you can get the details by sending an email to syndication@realestateguysradio.com. We're talking today about the tremendous change we've seen in the world and really what some of that means to real estate investors. A big part of it is staying level-headed and managing your psychology. We'll talk more, but first, it's time to play Real Estate Trivia. That's your chance to win a prize by knowing today's real estate trivia question, and it's easy. Just listen for the question. If you think you know the answer, send us your best guess to trivia@realestateguysradio.com. So you don't even have to leave your home. Just send an email, trivia@realestateguysradio.com. Give us your name, the answer to the question, and your mailing address. Because if you're the winner, we're going to send you an awesome book called Life-Defining Moments from Bold Thought Leaders. Last week, we talked about what the coronavirus means for real estate investors, and we asked this: where was Florence Nightingale born? Well, actually, Florence Nightingale was born in Italy. Even though that's not where she did most of her work, she was born May 12, 1820, into a wealthy, well-connected British family in Florence, Tuscany, Italy. In fact, she was named after the city of her birth. Here's our real estate trivia question for this week. Last week, the Bureau of Labor Statistics published the preliminary February 2019 unemployment rates for the U.S. states, and there were 4 states that tied for the lowest 2019 unemployment. Name at least 2. Yeah, 4 states tied as having the lowest unemployment. Now, this was last month, so that's probably changed. But as of last month, 4 states tied for the lowest unemployment. All you need to name is 2 of those states, and you'll win life-defining moments from Bold Thought Leaders. If you want to guess, or maybe you know, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Include your name, the answer to the question, and your mailing address. That is today's real estate trivia question. We're talking about how you can react in times of crisis. We've certainly been through the ups and downs of investing in all kinds of different stuff, but we ain't seen nothing exactly like this, and that's the point, right? That's why they call it a black swan. Nobody was expecting it. And whether or not this is going to be the real crash that Peter Schiff predicted or not, I don't know. He said this is the real crash, but we'll all know in the future. Right now, we just have to do the best we can with what we have.
Absolutely. That's all anybody can do. Unfortunately, you have to invest a lot of time listening to a lot of people because the answers aren't out there yet. If they were, somebody would patent them, package them up, sell them for a high price, and put a guarantee on them. But nobody can do that.
No.
And so you do have to work really, really hard. And you got to listen to a lot of noise, like this program, we're yammering on, but there's some pearls in there, and I think there's some good things. And there's other people that are out there talking, and we're going to be doing a lot more in the future. We're going to be stepping up some things that we're doing in terms of content creation and interviews, just because the pace of change is so fast. Even for real estate investors, we feel like we need to do that for everybody and for ourselves in order to help everyone get through this the best that they can. I think the biggest thing to recognize and always remember is the flip side of chaos is opportunity. Every problem out there, there will be a solution either now or in the future. And if you can become a part of that solution, you have a business opportunity. People's need for housing and real estate is not going to go away. The fundamental things that were driving economic activity are still present. What's broken is the financial system, the dollar, and people's trust in the stability of the environment they're in. Now, the thing is, broken trust takes a long time to replace. You talk to people that went through the Great Depression, it changed them. depression. They came out of the roaring 20s where everybody was gambling on the stock market and there was so much money being poured in and lots of credit growth. And all of a sudden, the gravy train hit the brick wall and everybody became misers hiding cash under the bed. And they realized that you can lose your home and you can be homeless and you can be out there cooking your shoe for your next meal because there weren't a lot of the social networks that we have today. And the government didn't have the printing press it has today. And so people changed and they became very conservative in terms of wanting to make sure they had cash on hand, knowing what their counterparty risk was, if the institutions they were investing with were trustworthy. And they became very, very conservative. Based on the back of that, we had some recovery. And then we got a little bit loosey-goosey. Of course, the government put some things in place that were designed to create safety nets. The problem is they also created financial instability. And we've been exposed to that on more than a couple of occasions. You know, if I could say right now, and I think I mentioned this before, but I think it's worthy, this is something we've been talking about since we did the Future of Money and Wealth, and really going all the way back to October of 2013 when we spoke at the New Orleans Investment Conference and we talked about the attack on the dollar. The dollar is one of America's greatest assets and greatest weapons. It's also something that has been largely abused, the responsibility of having the world's reserve currency. And little by little, the world has figured that out and tried to extricate itself from the dollar. So the dollar's been under attack for quite some time. Now, of course, it's still the cleanest shirt in the dirty laundry, as they say. And so a lot of people are piling into the dollar and you've got some temporary strength. But I do think as an investor, you want to be paying close attention to gold, whether you are investing it or buying it or not, which I think you may want to give some consideration to, but it's a proxy for what's going on with the dollar. And then you're certainly going to want to pay attention to the dollar and you're going to want to pay attention to interest rates. When the Fed sets interest rate, it's not a law, it's not a mandate. They don't force it. They manipulate it by the printing of dollars where they go buy bonds. And of course, the government is spending money that all has to be covered in printing and underwriting everything in every asset class. So in the short term, that all can seem real good. But in the long term, it could be a real threat to those of us that borrow, pay, earn, and denominate worth in dollars. Is the dollar going to collapse tomorrow? I don't know. I don't think so, but it could. We've been talking about this for a while. So that's one thing I personally am paying a lot of attention to. And we're going to be talking to some really smart people that have opinions on it from both the gold side, the oil side, the currency side, the bond market side. And then we have to factor that back into, okay, now what does that mean to real estate investors?
You know, when you are in any kind of a crisis, one of the most important things to manage is your psychology. And right now we are seeing people at their breaking points. That's only just started. We're going to see more of it. For some people, it doesn't take much to rile them. For others, it takes a lot to rile them. But I'll tell you what, one of the recurring themes that has been buzzing around our offices this last week is the reality of our long-term relationships. Give you some tangible examples. We do an event twice a year, and 80% of the time it's at the same hotel and has been for 5 years. So this is a hotel we know well, we have a great relationship with, the folks are awesome there, they provide excellent service to us, we know them all by name. I mean, we are pals, buddies, etc. Well, all of a sudden, it became clear that we had to change course and do our event virtually for the first time ever. We're really excited about that. We'll talk about that more before we're done. But they all of a sudden behaved very differently in crisis. We have 2 events coming up, both of which we've chosen to do virtually instead of physically for all the obvious reasons. As soon as we can get back to live seminars and belly to belly over a beer, we will. But in the meantime, we got to get together mentally. We have to learn. We have to interact. And so we had 2 hotels that reacted completely differently in terms of how they handled the information. And that will have a long-lasting effect on the relationship. I want you, whatever you're doing right now, to consider how you're behaving in the relationships that you hold dear. Whether that's in your family, whether it's at work, whether it's with vendors, whether it's companies, the restaurants you're going to, all those things. Because as Brian Tracy says, everything counts, and people will remember how you acted long after this crisis is gone.
Well, and even more important than that, from a pragmatic perspective, as an investor, if you want to be first in line for great deals, it's going to be about your reputation and how people perceive you to be. And you really find out who people are in a crisis. No, it certainly impacts our relationships, And so think about this. Tom Brady's been in the news lately because Tom Brady's finally leaving the Patriots after all this time. But if you think about how Tom Brady got his job, there was a quarterback in front of him named Drew Bledsoe. And Drew actually, after he left the Patriots, ended up going to the Cowboys. And then he was the guy in front of Tony Romo. And in both cases, and I'm not trying to disrespect Drew Bledsoe in any way, shape, or form. Great athlete, great quarterback, probably a great guy. And I couldn't carry his jockstrap when it comes to playing football, so I'm not in a position to criticize. But all I'm saying is that when you're put under the pressure of a game and you, for whatever reason, are unable to perform, and even if it's physical, right, you come under whatever stress, then what ends up happening is the person who's in second place gets elevated to first place. In this case, we've got these two hotels, and the one hotel that was in first string on our list just fell to second string, and a hotel that was second string on our list just moved up to first string. And it all happened in a matter of a day based on how they're handling this current situation. And that's how quickly your prospects can change. So I did not want to let that excellent point that Robert made, go unembellished, because it arguably could be the highlight of this show and the most important thing that you've learned. How you behave, how you show up, how you treat people, how you conduct business in the midst of a crisis will tell people a lot about you. You have an opportunity to earn some real loyalty and to move up the food chain into first in line for the deals and the opportunities and the efforts of others that you need to be successful. Take advantage of it. Think of ways, and you don't have to be sacrificial, but given a choice, to lean one way or the other, you can be a jerk or you can be a nice guy or gal. Lean towards being the nice guy or gal. You can be unreasonable and think about everything from your own point of view, or you can see the other side of the point of view and try to negotiate a legit win-win. You can try to get what's yours because there's scarcity, and you better get yours while you can because the world is running out of everything, and I'm going to punch you in the face to take your roll of toilet paper. There are people who do that. And on the other side of the coin, you can be that guy or gal that says, hey, let's open the package and share. I'll buy it, and then we get out in the parking lot and we'll open the package. You take half, I'll take half, okay? Because we're in this together. Anyway, I think that's a great point, Robert. Thank you for bringing it up.
Most people, when they think of Drew Bledsoe, think football, but you know what? He went on to a completely different career and reinvented himself and started an award-winning winery, and he has great wines today. When we come back, we're going to talk about how you might reinvent yourself in the middle of a crisis. You're listening to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Are you ready for some good news? The Secrets of Successful Syndication Seminar is still happening this Friday and Saturday, March 27th and 28th. And now you can attend virtually without the travel expense. Most public gatherings are practically impossible as the world hunkers down to fight the spread of COVID-19. Yet, as freaked out investors flee the free fall of Wall Street, the resiliency of real estate is shining. After all, while many stock portfolios have crashed over 30% in a matter of days, most rents and mortgages have not. This means the landlords and lenders on the other side have a buffer between crisis and cash flow. Remember, many bold and strategic investors made a lot of money in the wake of 2008. Now is the time to get educated and positioned to prosper in the wake of 2020. To learn more, simply send an email to syndication@realestateguysradio.com for all the details. Our incredible faculty haven't changed, just the venue. Come join us online for the Secrets of Successful Syndication from the comfort of your own home or office. Send an email right now to syndication@realestateguysradio.com. When it comes to successful rental property investing, it pays to be picky. Pick the right markets, pick profitable properties, and pick great property management. That's easier said than done, but we've got great news. Terry Kerr and his rockstar team at Mid-South Homebuyers are going strong in Memphis, Tennessee, and Little Rock, Arkansas, too. So for a top-notch turnkey single-family home rental property, whether you're a new investor or have a large portfolio already, pick Terry Kerr and Mid-South for a truly A-plus investing experience. To learn more, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com.
Hi, this is Sam Freshman, author of Principles of Real Estate Syndication, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for sheltering in place and listening to the Real Estate Guys. We appreciate it. We've got a great archive of shows dating way back. So if you're really bored, that'll give you something to do. We're talking today about navigating these uncharted waters and lessons that we can learn. This is the time to figure it out. And for many of you, as we talked about before the break, this may be a serious time for you to consider reinventing yourself. You know, I love the fact that you brought up Drew Bledsoe. And boy, that guy today is a philanthropist and he's had a great career. And I know he has casual conversations and relationships with a lot of the NFL stars still. And it's got a great successful winery. Wine Spectator rated several of his wines really high. So the point is, you know, today people change careers every 5 to 7 years. Not just companies, but careers. And we're constantly reinventing who we are and what we do and so forth. So just food for thought, you might want to reinvent yourself in these times. And there's a lot of ways to do that. From your real estate portfolio, we talked about some tangible steps today. So let's make sure no investor left behind. Tangibly, get in discussions with your current lenders. If you have loans in place, get in a communication with those folks. Same with your property managers. This is the time to rally the team together. Just find out what's happening, anticipate, don't react, anticipate. Number 2, talk with your mortgage professional. You know what? This could be, with the interest rates as low as they are, a great time to refi, maybe to cash out. I mean, there's cash out loans available today if you're creditworthy and your property looks good. Maybe you want to be thinking about adjusting your amortization. A lot of things you can do, get in those conversations. We talked about being ready, prepare for the sale that's coming. So get into position. There's going to be bargains, and you don't want to be sitting there wishing you could. You want to be sitting there glad that you can. And then I think another thing to do, stress test your long-term holds. You know, if you're going to keep something in your portfolio a long time, you have to ask yourself all those what-if questions. What if interest rates go up? What if X percentage of my tenants lose their job in the current environment? Well, are they going to be protected? Are they not? Right? So just kind of stress test your stuff. I think it also might be a time to talk to your attorney proactively. You know, most of us sign contracts with a force majeure clause. We have no idea what that means and we never need to use it. But we've had to use that clause in 3 transactions this week in 2 very different industries. So make sure you know what your obligations are, what commitments you need to keep, what things you might be able to get out of if things turn bad. Just be prepared in that stuff. And then I think this ultimate thing, who are you as a real estate investor? Is it just something you passively do, or is it now a time to get active? A lot of real estate agents and brokers and people in the transaction business right now are also a little bit concerned. Like, do you think everyone's top of their mind is, yeah, let's go out and buy a house in the next couple of weeks? Probably not. So some of those folks who don't get regular paychecks and might not be eligible for unemployment are going to have to do some soul searching, and I think we have a suggestion.
Yeah, I mean, there's people out there that are worth, you know, say $5 million, and now they're worth $3 million. Well, that sucks for them, but they still have $3 million. Now they want to preserve it. Now they want to grow it. So those people have the opportunity to be your investors if you decide to reinvent yourself into real estate entrepreneurship through syndication, which of course we're huge fans of. And the thing is, if you're an entrepreneur, you're going to totally appreciate that. Imagine being able to graduate from college and you've got your degree and you decide, I don't want to go work for somebody else. I want to start a business. And somebody came along and said, hey, I'll tell you what we'll do. We'll pay you 70% of your, X income. We'll give you a basic stipend. We won't require any work of you. You have all the free time you want. You can do anything you want, but we're going to pay you every month, every week a check. And then you can go busy and do the work that you need to do to put your business together and build it up and ramp it up. Well, if you've just been recently unemployed and you're going to get an unemployment check, that's the gift you've been handed. Now you can be thinking, oh my God, I lost my job. That's one way to look at it. Or you can say, oh my God, I've been given this amazing opportunity to reinvent myself and I'm going to be subsidized while I do it. And of course, the thing is, if I'm listening to what the administration is saying and Congress is saying, they're going to be looking to make loans to small businesses. They're going to need rapid recovery. And I think that if you start preparing yourself from an educational perspective, a planning perspective, now, right now, then when this thing blows over, you're going to be ahead of the curve and ready to take advantage of those stimulus programs that come out in order to reestablish business and commerce. And so this is a great opportunity to do that. Obviously, you can do that in any area you want. We're big fans of real estate, all different types of product classes and marketplaces and demographics you can serve. And the difference is, are you going to invest your own money? If you have some, good for you. If you'd like to either share the risk and share the reward, or if you don't have enough of your own money to do anything of scale, then this is a great opportunity to learn to syndicate. And we still think, even today, probably even more so today, that it's the greatest opportunity in real estate investing going. And I think it's one of the best business opportunities going right now, in spite of, or arguably because of, what's going on.
But like all great opportunities, you do have to act quick. The secrets of successful syndication is this coming weekend. If you're listening to the show in real time, March 27th and March 28th. Don't worry, we'll do it again. But this weekend, we're doing it virtually, meaning it doesn't matter where in the world you are. You can plug in, listen to the faculty, get the information, including a whole session on how do we react and be ready for the bargains. Marisa Raoul, the attorney, is going to be with us. Dave Zook, who's raised more than $160 million in the last 5 years. Damian Lupo is going to talk about one of the coolest places to go look for money. Victor Minash, who is a good friend and host of the Real Estate Espresso podcast, talks about how to raise all the money you need. And our good friend and CPA Tom Wheelwright's going to be talking about the tax side of it. Apartment King Brad Sumrock, awesome attorney Jillian Sidoti, on and on and on. Because we aren't limited to a physicality, we've also got a couple of surprise guest speakers who have cleared their schedules to be part of this. If you'd like to find out information, or if you've been thinking about coming to this event for years but have never pulled the trigger, you've never been able to do it as cost effectively or as comfortably as this, just send an email to syndication@realestateguysradio.com. Syndication, that's SYNDICATION, hard word to spell, syndication@realestateguysradio.com, and we'd love to have you there.
We'll teach you how to syndicate in place.
Which sounds a lot more fun than just sheltering in place. Anyway, we've got a lot more to say as the weeks progress and news changes every day. I think the big message is don't get disheartened. Things are tough. If you took a hit in your portfolio, I get that. If your job is no longer there, we have a big heart. We're empathizing with you, but together we'll all get through this, and the way to do it is to stay close, to stay educated, to keep putting good ideas and encouragement in that fertile soil that is your amazing brain. So join us for the secrets of successful syndication. Just send an email to syndication@realestateguysradio.com. And until next week, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and Rich Dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.